everyone, this is Andrew McNair from SWAN Capital with our August 2017 Informational Economic Update. In this month's video, we're going to talk about some major economic headlines that influence markets in July and give you some insight into what it might mean for you as an investor. Now, as always, please stay tuned at the end for a required disclosure statement. So after a lackluster start to 2017, the U.S. economy is quickened this spring, powered mostly by consumer spending, which was also fueled by a steady labor market. The Commerce Department has said that the GDP, or the gross domestic product, which is basically the economy's total output of goods and services, explained at 2.6% annual rate from April through June quarter. That's more than double the revised 1.2% pace that we saw in the first quarter, so that's great news. Now, a slow first quarter followed by stronger growth in the spring has been actually a familiar pattern over the past several years. And because of it, the government began combined efforts to manage these shortcomings in the government's seasonal adjustment process. So even with this spring rally, economists and analysts think that we're not going to meet those ambitious targets set by President Trump, who pledged to boost growth rates of GDP to 4% or better. Now, even that being said, for 2017, economic experts believe we will see about 2.2% growth, which has actually been in step with the Great Recession recovery since mid-2009. So that is still great news. Now, much of April through June strength came from consumer spending. 70%, in fact, which is normal, of economic activity is because of our spending. Also, you saw inventory reductions, which hindered first quarter growth. Now, if you look across the pond internationally, the U.S. dollar was weaker at the end of July. U.S. stock futures pulling back. Now, European markets were actually in the negative, while here, the Dow Jones, the NASDAQ, and the S&P 500 all hit record highs last month. Now, we do want to keep focus on technology stocks because they took a pounding. A lot of people think it's because of speculation and overvaluation in those industries. Now, that was offset because we saw a lot of gains in telecoms, energy, and consumer stocks. So even so, these rate-sensitive sectors felt broad-based gains after the Fed decided not to raise rates, which is good news. Now, that's it for this month's August Informational Economic Update. As always, if you have any questions or concerns about what we discussed, do not hesitate to give our office a call at 850-380-9558. That's 850-380-9558. As a client, make sure you RSVP for our September luau. Again, that's it for Andrew McNair from SWAN Capital, signing off for the month of August 2017.